Give us an idea of where we are with this rally. It's looking rather toppy at the moment, but I've been saying that for a while now.
Yeah, good morning, everyone, and thanks for having me back here. Yes, admittedly, we see that actually the record high index has been quite phenomenal so far. And I think this partly reflects investors' expectations for earnings to hopefully recover in 2021 and also 2022. And as you rightly mentioned just now, the recovery so far has been quite uneven, with the technology sector responsible for a significant share of the rebound. But as you mentioned just now as well, this morning, it seemed like there has been some sort of good news that supported some sort of value rally. But however, we see that if real yields continue to be so low, given that global central banks are going to keep the interest rates at a relatively low level, we see that growth might still continue to lead rally in the near term. And because U.S. equity index is heavily weighted in growth sectors like technology, this suggests that there might still be a way to go for U.S. equity.
Yeah, the thing is, market breadth, if we look at that, in the US has been very narrow. In some cases, we've actually seen, like we did last week, a proportion of 2 to 1 in favor of losers on the NASDAQ, and the market's still going up. But when you look at China, it's much more evenly spread, isn't it?
Yes, indeed. But actually within China, we do see that most of the new economy sector, which we continue to like, actually has been leading the market as well. And because especially with COVID actually accelerated or magnified this ongoing structural growth trends that we continue to like, not just within China, but also within Asia. And so because of the Asian equity story continue to be about Asian goods and services for Asian consumers and corporates, not just for exporting. So, and with export actually continue to improve because we see the PMI, especially the new export orders, continue to rebound. We see that Asia might continue to actually have a more hopefully broad-based recovery, not just from the domestic story side, but hopefully on the export recovery story side as well.
You mentioned a little bit about this rally and what's really fueling it. I'm just wondering, it doesn't seem like anything that could get in the way at this moment. How much more can this rally actually broaden out if there's still no vaccine and there's still a bit uncertainty about this global cyclical recovery?
Yes, indeed. We think that markets right now are actually searching for more new catalysts. Like you rightly mentioned just now, if there's a material breakthrough in vaccine development, that will be a plus. That will definitely stimulate more risk sentiment. And also, hopefully, by the end of or after the November 3 election, when there's more clarification in the U.S. political outlook, that could also continue to help. But then, even with the vaccine, we think that there's a potential binary outcome, because yes, we think that with a vaccine being available, economies will be excited by it, and this will boost risk sentiment. But the current vaccine narrative might need a correction with potential logistical challenges and also other headwinds that are not fully realized yet. And also, if they actually turn out to be unsuccessful, unluckily, there might be disappointment, and also there might be sector rotation potentially away from U.S., maybe growth to value. These are all not being priced in the market just yet. So these are potentials that there are still high degree of uncertainty around the outlook for the virus and also the vaccine.
We've seen some of the popular trades, this reflation theme, like yield curve steepeners, break-evens, tips, reversing now. And the dollar certainly has seen that in the last 2 days or so as well, where strength is coming through again. Do you think the dollar is the next shoe to drop here?
We continue to think U.S. dollar may continue to weaken given the different factors. For example, the U.S. rate differential may continue to come off, and U.S. growth is also likely to recover slower than other regions given the pandemic outlook and also uncertainty around the U.S. election. So we continue to believe that dollar is likely to remain on the weaker side. But this is actually why we can remain constructive on Asia, because Asia tends to do well when dollar is weak, and this is positive for Asian corporates as well, and it makes debt servicing and also assets cheaper. So this will continue to provide us a constructive outlook on Asia.
Marcella, absolutely, and that's one of the three key drivers that you've been identifying as keeping things going and keeping this bull run going. What are the others?
You mean other than the U.S. dollar, just I mentioned right now, there are two more important key drivers. One of them is the earnings, what most people also pay attention to, because earnings revisions actually have improved significantly with APAC, ex-Japan upgrade over downgrade ratio actually back to 1. And also latest 2Q earnings results have been largely in line with particular strong numbers from Taiwan, Korea, China, and also most of other new economy sectors or stocks. And in terms of valuation-wise, actually price-to-book ratio is not particularly demanding, actually in line with long-term average. And even though we have seen the China rally lately, China is actually still not looking quite that expensive despite the strong run. And also compared to the 2015 episode, China has actually got better FX and also credit and also property markets this time around. And so overall, we're saying Asia stock market remains quite vibrant with actually structural growth opportunities that I mentioned just now that continue to support our stories. And especially we continue to like Asia, China A-share.
And Marcella, there's so much focus on U.S. tech stocks now, and you're actually focusing more on the Asia tech side, where you think the opportunities are perhaps more. Tell us a little bit more on why. I know there's this whole buzzword of dual circulation in China now. How does that change a strategist like yourself and how you position for some of these stocks?
Yes, indeed. The dual circulation hype so far, we will continue to support the story because the focus on domestic demand will continue to support China A and China A share. And as you mentioned just now, with so much focus on U.S. tech, and actually we think that Asia tech is actually quite undervalued as where, and it is actually where the future is, because actually within Asia there are a lot of tech leaders. And we believe that Asian domestic market is actually quite big enough to actually help support the domestic champions. And some Chinese names can also benefit from import substitution. And even though most of the focus are still remaining in U.S. tech, we believe that Asia tech actually have a growing investable universe that not just within Asian investors should pay attention to, but also outside of Asia, other investors should also pay attention to, because it continues to evolve with both breadth and depth. Because actually, even though people always just pay attention to maybe Asia hardware, but actually there are quite numerous online-related stocks going public in the few years, and we have some more coming in the pipeline as well. So, and with the universe that actually spans across not just e-commerce, there's gaming, streaming, advertising, healthcare, and also different tech consulting, etc. And there was also the Starboard launch in Shanghai last year, and also within Hong Kong, we see the recent inception of Hang Seng Tech Index. These are also examples of the growing universe. And most importantly, we got within China, we also got great government support. And also, not just within China, we also got Korea as well with huge government support as well. With government support, this will directly boost this sector even more in the near term and provide significant earning support. So overall, we think that even though U.S. tech has been a focus and has been supporting the U.S. equity, we think Asia tech should also provide significant quality growth opportunities.